Good morning, everyone. I'm Vince Lancy. This is the GoldFix Market Rundown. There's our home page. Front and center is a think piece on Basel III, or actually an analysis on how Basel III really doesn't do what it says it does, um, or what people have been saying it does. Top right-hand side, GoldFix PM. Then we'll be discussing that post, uh, talking about silver extensively. And top left-hand side, today is the Fed Day, Fed Decision Day. We'll be discussing from that post as well. The other two posts, lower left-hand side, that's the founders version of that post. And the lower right-hand side is a geopolitical piece, which has gotten pretty popular on Zero Hedge. And it gives a point of view of how China views Iran. And I think if you're a Western person who's trying to get a handle on how the rest of the world looks at Iran, specifically China, since they are the head of the BRICS, and Iran is really the pain in the ass, I guess, in the BRICS when you think about it. There's some interesting takes in there. For example, China's not going to rescue them, as the title implies. Anyway, those are the stories. Let's get started. Silver surge and Fed Day. I'll fire the intern for not hiding that green spot there. These are the markets that I'm primarily looking at this morning. Top right-hand side, silver. Steady as she goes until the end of June, and or 88 in the gold-silver ratio. Top left-hand side is oil. And I want to draw your attention to this because I drawn these lines a while ago. And essentially the lower channel is a structure, a range that we spent most of our time in since 2016. And then the upper structure from 2021 is a structure that we spent some of our time in 2021. But before 2016, we spent our time in. So these are the bullish channels and the bearish channels as the market tries to find its way within those areas. And that skinny rectangle implicitly in the middle, that's the dead zone. We just exited the dead zone and are now in the bullish channel. So I guess the title is Oil is on the Verge of Greatness. If this month closes above 73.75 in spot, then there's a very good chance that we will start to work our way towards 113. It's crazy to say, right? But it's not crazy to say. And if we reject it, we go back into that dead zone, you do nothing. So I think it's an important juncture for oil. I have nothing on. The dollar, lower left-hand side, that's a monthly dollar. It looks like shit, right? It's broken a structure above. I have no opinion personally, but everyone is bearish on it. And they're bearish not for stupid reasons. It just seems like a crowded trade now. But the bearish reason is we need to weaken the dollar as manufacturing. It's the stuff we talked about for 6 months now. Basically, unless you're building factories tomorrow with a magic wand, poof, and unless everyone's going to start buying our great creative products, well, until that happens, to get out of the deficit, you need to export what you have. And to export what you have, you need a weaker dollar. That's what we've been saying. That's Trump's plan B. And Trump's plan B is becoming his plan A as time goes on. On top of that, he's tactically cutting deals, bilateral trade deals with nations, where we're going in my opinion, we're going in saying, all right, buy our goods, we'll give you a 10% discount. How are you going to give me a discount? We're going to lower the dollar and we're going to help support your currency. So everyone is doing that. And on top of that, yesterday, this is actually pretty annoying that it hasn't been picked up on this way. What? Maybe I'm wrong. Yesterday, the Fed announced a change to what's called the ESLR. Um, it's a ratio that governs how many treasuries they have to have or how much they can use them as cash. Well, they're going to make it easier for banks to hold treasuries and leverage them. That means buy treasuries and sell dollars. So as much as I want to say this is overdone and everyone is bearish, uh, the news just continues to tell me that it's not overdone. Uh, Bitcoin, spending a lot of time on this morning. Bitcoin, another structure that looks like shit, and I'll put a number on this. We're trading 104,700. This is on my radar, right? Unless we get above 110, um, then the downside to 80,000 is not out of the question. Now, mind you, I've been bullish. I bought it above 100, looking for 130, and I'm long at 108 and change. But unless it gets above 110 relatively soon, uh, I'm wrong. Egads. You could see the markets there. I just went through a long intro. So let's just say that the markets are mostly noisy. Right now, they're mostly noisy. I wouldn't put much emphasis on any prints that are there right now. Of course, platinum's up 20. So, all right. So let's get to the two stories. The first one is the silver bull begins. And where did that go? My second intern was just fired. Okay. The silver bull begins. Silver yesterday led the price action of pretty much all markets, defying risk-off flows and moving higher, even as broader markets were pulled in opposing directions by weak macro data. That's bullish for risk on, and fresh geopolitical shockwaves coming from Trump, and that was bearish for them. Silver began its rally early in the European session with buying pressure accelerating around 5 a.m. Eastern Time, shortly after the London market opened. Prices jumped from 36.54 to 37.16 in under an hour, really under a half an hour, ultimately hitting a high of 37.25 by midday before settling just below that at 37.09. Right now it's 37.15. That represents a 1.5% gain yesterday, outperforming all other major metals. The full analysis in that is in the premium post, Goldfix PM, the silver bull begins. Goes through, we have some various charts and some comments on that. Next, today is the Fed day. Powell risks contradicting himself today. Stocks are very dovishly biased these past 2 weeks. There is one reason to not be so biased, bullish. We're not sounding an alarm. But the Fed dot plot still shows a bias of 2 rate cuts this year. The dot plot, if you're not familiar, is their economic outlook, and it kind of shows who's bullish and who's bearish on cuts in a dot plot sort of way. It's an economic analysis. All eyes today will be on that for revisions downward towards 1 cut, which is increasingly likely given the clock is now at mid-year. Editorial comment to give you an idea of what's in that post. Look, the Fed's own governors, whatever they are, board of directors, says we're going to cut twice this year. But Powell keeps saying uncertainty, 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 uncertainty. Well, he's running out of reasons to be uncertain. The economic data is increasingly showing that, shockingly, tariffs are ultimately not inflationary, at least in the intermediate term. And that's because people don't have as much money to spend on things. And after the initial flurry of buying to avoid tariffs, people have stopped buying them. It's like buying toilet paper during COVID. You buy it, you don't have to buy it for 6 years. And people are passing on higher prices now unless the Fed cuts rates. So Powell's running out of room to say we're going to cut twice and tariffs are still making me uncertain. So there's a little bit of, he's running out of room. He's looking like a bullshitter now. Let's put it that way. That continues in premiums. FOMC Powell risks contradicting himself, which went out this morning. Related post, Third one down. We mentioned the first three. Well, the second one, the FOMC trade idea, we think an asymmetrical trade idea is to be short stocks going into the Fed today. We are not recommending that. We just see something that says it could rally 2%, it could drop 5%. So who knows? UK gold mining company Bluebird to convert revenues into Bitcoin. Hate Bitcoin or not, you got to pay attention to this. Okay. Uh, Geopolitically speaking, oil and gold surged on Trump's Tehran warning. And Sunday, we recorded 2 hours CFTC analysis, macro discretionaries back, and why we think they're back um, in gold a little bit and they're back in silver, really looking at it for that June 30th deadline. Data on deck, it's Fed week, you know that. Housing starts are at 8:30, it's 8:14 now. And that chart at the bottom there, that's our gold silver ratio, pursuant to the conversation we just had. Vince, have a great day.